And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning. It is, of course, Monday. As this is a problem, right? We're worried about fixing all these other things in the world and stuff, but we still haven't fixed that Monday comes every Monday. I mean, that's the one thing that we need to fix.
You just want to advance to Tuesday?
No, because then Tuesday becomes Monday. So I haven't figured this out yet. But
you're in trouble.
Maybe this is the whole purpose of MMT, is that modern monetary theory, is that simply we give everybody money, nobody has to go to work. Well, there you go. You get rid of the Monday blues, right?
Saturday every day.
Saturday every day. That's right. Welcome to the show. It is, of course, Monday as we get ready to wind up the month of July. Now, why is that important? Well, we've been talking about this over the course of the last few weeks, is that as we get through July, we're going to get into the last really 2 months of the year. August and September tend to be weaker months of the year for the markets. We also have had a lot of resurgence in terms of economic recovery, right? Because of a lot of the stimulus that's been coming in, right? The extra $600 a week in terms of the unemployment benefits, the $1,200 checks. And that provided a lift to some of the economic data. So expectations of the economy were very dour. And now we've seen this lift of economic data. So economic surprises have been running well ahead of schedule. Well, now all these economic optimists have now come up on their expectations. So the risk over the next couple of months is disappointments in terms of what actually happens with the economy. And this is going to be part and parcel of what's going to happen with this current bill that's being worked on right now up in Washington. So back about 4 weeks ago now, the Democratically controlled House came out with a $3 trillion stimulus package, right? And it included relief for workers. It included $1,200 checks. It included an extension of the $600 benefits, and of course, money for all kinds of testing and hospitals and you name it. I mean, just $3 trillion worth of more spending. Giant package, didn't go anywhere. And so now the Senate's working on a bill that we should actually have an announcement on today. There's been a lot of talk over this weekend, and whenever they troll out Treasury Secretary Mnuchin to say stuff, you know that it's getting desperate. So over the weekend, though, lots of headlines here that a bill will likely be introduced today. Now, this is where the conflict is going to occur. This is where the Senate bill and the House bill have to be reconciled, and this is where all the debate's going to come. So the House has a bill, the Senate has a bill. Those two will come together. They'll start to reconcile those bills, try to come up with one ending bill. This is probably going to take longer than people expect. But the Senate bill is talking about $1,200 checks to households. So that's going to be welcome relief to, households around the country that need that money. But it also is talking about a 70% replacement of prior earnings. So now this is a big difference from the $600 a week benefit, which was actually giving people more than their prior earnings. So whatever form this takes, we're likely going to see a reduction in the amount of money coming into households. Now, the other thing about this is also an extension of the eviction moratorium. Now, for the last several months, if you pay attention to what's been happening with housing data, what's been happening with delinquencies and defaults, those type of issues, the one thing that you haven't seen a lot of is a big rise in evictions on houses. That's because we've had this eviction moratorium. Landlords have been unable to evict their tenants even though they weren't paying rent. And so this is impacting people that own real estate. They've been unable to collect rent. They've been unable to evict unpaying tenants to get new tenants in. So for everything that we do to help someone, there is someone else that is impacted by that. And so we're seeing a lot of landlords under a lot of pressure because of this. But this bill that we're proposing now will extend that eviction moratorium. So there's going to be there's an offsetting impact to the economy. Yes, we're keeping people in houses, but we're also hurting the landlords at this point as well. But again, we're going to see a reduction in income. Now, government transfers as a percentage of disposable personal income, we talked about this last week, is now about 38% of disposable incomes. In other words, 38% of personal disposable incomes, what people have to spend after tax. 38% of that now is government transfers, highest level on record by a large stretch, and that's all occurred over the last couple of months. But this is that $1,200 a check, that's the $600 a week, etc., all showing up there. 1 in 3 households basically now dependent on some form of government support. So this is really the critical aspect of this bill and what it means to the economic outlook as we go forward over the course of the next couple of months. So August and September, potentially big challenges for the markets. Now, real quick here, we've been talking about for the last couple of weeks that the market's been on a money flow buy signal. That and actually changed on Friday of last week. We actually registered a sell signal here. We're also very close to triggering another secondary sell signal on our target chart as well. But again, what happened on Friday was important because we temporarily had a breakout of these June highs that was unable to hold, and now the S&P slid back below that. Now we're going to try again today to get back above that level, but this has continued to be a very formidable level of resistance, and now there's additional weakness because of the impact of the monetary of this money flow sell signal that we have in place now, suggesting that money flows are getting weaker. This all kind of corresponds with moving into August and September, which typically tends to be weaker months of the year anyway. You got people leaving in Europe. A lot of the investment managers go on vacation for an entire month. So everything kind of weakens here over the next month or so. This doesn't mean, of course, that the market's going to crash, not by any stretch of the imagination, but it does suggest that we're likely going to remain trying to trap potentially right here in this kind of ongoing range. We've got a lot of support at the 50 and the 200-day moving average here, so there's not a lot of downside risk at this point because we are in a bullish trend of the markets. But it also suggests there's very limited upside, particularly after this week. This week is a majority of the S&P 500 companies will be reporting earnings this week. So we're going to have a big deluge of earnings this week, and then that's going to start to tailor off. So beating earnings expectations, even though they've been dramatically lowered, has been a support for asset prices here. It kind of gets people excited in the short term. So, we got to beat the number game. But that is going to wind up this week here. So this week is going to be kind of really critical to make sure the market kind of remains intact here. So by the time we get to the end of the week, we'll have a lot more to know. But kind of watch what's happening here again as we move in August and September. If you've got a lot of risk in the markets, maybe a good time to kind of reevaluate that just a bit. Okay, we're going to take a quick break. We're going to come back. Got a lot of stuff to get into this morning. Be sure to go by the website, realinvestmentadvice.com. We have a new blog post up this morning. We'll talk about here in a second. A new survey out about retirement confidence. And so we'll talk about that because it's interesting, given the big run in the market, what this survey actually said about retirees and their views on retirement. So we'll talk about that when we come back. But that post and those charts are on the website now, realinvestmentadvice.com. I'm Real Lance Roberts. We'll be right back.
Investment news you can use, delivered at the speed of the internet. Sign up for the Real Investment Report now at realinvestmentadvice.com.
Well, before we get into our article on retirement confidence, over the weekend we got the notice.
The notice?
The notice. Kids are online. Students are online for the fall. Yeah, so there was still some hope that parents were going to get a break here, and their kids were going to go back to school.
Yeah.
So, but we did get a notice over the weekend. Kids will be online for at least the first 6 weeks of school.
Yeah, this is Katie School.
This is sorry. This is Katy Independent School Districts. May not be where you are, but we're seeing this. But we're seeing this in other parts of the country as well. Teachers are opting to do this all online.
And,
of course.
and when will this begin? What date?
school's going to start the end of August. So
Okay,
next
so-
like 3 more weeks now.
Sci-Fair,
Right.
in my neighborhood, is not going to start up until the 8th of September, which is after Labor Day, which is the scriptural time that school should begin,
Right.
post Labor Day. So it's
Post-Labor Day.
interesting they're moving back to that.
Right. Well, we'll see how long. But and then of course, like after Thanksgiving, I don't think they go back. So
Yeah.
I mean,
Oh.
everything's getting shortened and condensed and all this. So that's going to be interesting because according to federal mandate, the Department of Education, right,
Yeah.
which
Yeah.
was ever since the Department of Education took over education in 1980, we've all gotten stupider. And that's a true story.
True story.
A true story. Our rankings in the world have slid dramatically since government. See, and I told you this last week. Anytime you put government in the middle of everything, nothing gets better, right? So education, we've all gotten stupider. But it's interesting that they're supposed to. The students are supposed to complete a certain number of hours every semester in order for schools to get their government funding, and there's no way we're going to get even close to that.
No.
So, it's going to be interesting how they kind of get around all this. But all I will tell you is that alcohol stores are excited because that means alcohol sales will go up again once parents have to start drinking at 10 a.m. in the morning. So,
Yeah.
in fact, as soon as the news came in, I think my wife went to Specs and stocked up. I'm just, so.
The generation educated by day drinkers.
Exactly. And so that's a whole new thing. Maybe we need to look at Stars and Conagra brands and Budweiser for our next levels of investments.
Supply and demand, baby.
That is correct. White Claw is apparently taking over the world as we know it at this point. All right, but no, seriously. But talking about this, one of the things that I have a huge challenge with is with my kids and grammar and English. Talking about just the proper use of it, right? So that not every other word is like and and stutters and this, that, and the other thing, right? And so teaching them is always a challenge, and teaching them about history and getting them to read the right books and those type of things, huge challenge in the digital age, right? It reminds me of Ted Danson. If you ever were an old fan of Cheers, right, back in the day, Ted Danson, and of course you had Norm and the whole crew at the bar of Cheers. And one of my favorite episodes was that, what was the girl's name? The blonde that he was always in love with. Her name escapes me on top of my head.
I can see your face. Yeah.
Anyway, so she's talking about, she's very educated and all this, and Ted Danson's trying to impress her. And so Norm convinces him that he needs to read War and Peace and be able to dialogue with Diane.
Diane, yes.
It needs to be able to dialogue with Diane about War and Peace to show that he's educated and well-rounded and all this. And so he struggles through this entire episode, right? He's reading War and Peace, this massive, 1,000 pages of War and Peace. So he's reading through this whole thing. And finally, at the end of the episode, he's in the bar talking about it, and there's Cliff Clavin, right? And he's talking about having to read this challenge of War and Peace so he could, impress Diane with his intelligence and his well-roundedness. And Cliff Clavin goes, yeah, I watched the movie of that. That was really a good movie. And Ted Danson goes, there was a movie? And this is the challenge with my kids, trying to get them to watch, trying to get them to read books and understand literature and all this when, there's so much distraction on, video, right? And a lot of these
Let's see.
things
There's Tale of Two Cities is a movie.
Is a movie. So is
Last of the
Fahrenheit.
Mohicans.
Fahrenheit
458.
Yes, thank you. I was 144, 12. I can't remember the number, but all these books, Lord of the Flies, which was redone as the Hunger Games. It's interesting, right? And this is a big challenge. So Rutgers So why do I tell you all this? Because Rutgers University has now declared grammar to be racist.
Good grief!
And from the standpoint of that, proper grammar, right, is not fair to people of other countries that have, that are of separate dialects, right? Trying to incorporate their dialect and then requiring them to learn proper grammar.
English grammar.
Yes. Right? So that's not fair to them. Well, I just have news for Rutgers, is that you're kind of a day late and a dollar short because Twitter ruined grammar about 3 years ago.
Yeah.
So, I mean, when you're limited to 140 or 280 characters, when it was 140 characters, it was
180
worse.
And then up to 240.
Right. Yeah. So now, right, it was worse before, but now that you've got 280 characters or whatever to work with, it's not as bad. But the choice used to be, what word did you slaughter as grammar, to get your message out in so many characters. So,
well, the reality...
the social media has killed grammar. And then, of course, the other part of this is texting. Texting has killed grammar. So I'm not sure that grammar even really matters anymore, nor that anybody actually cares.
Well, you know what? When you were limited to 180 characters and now 240, it actually is a challenge to intelligently communicate in that format. It actually takes more brain power to do it right.
Right.
Subtle little secret there. And I got 3 words for Rutgers.
Right.
LOL.
Exactly. LMAO.
Yes, that's 4.
So there you go. But yeah, I mean, this is the problem with social media, right? So social media has made us all stupider as well. And people lock themselves into isolation chambers. They only get the information that they want to hear, right? So they exclude everybody that doesn't agree with them and their views. And so, we create these little information silos. And then on top of this, we slaughter grammar as part of this. So look, there's nothing good coming out of social media. And if you ever want to watch a movie that is a forecast of where we're going to wind up, Idiocracy.
Oh yeah,
is the best movie ever. If you want to know where we're headed, the only change to that movie is they remade it today instead of Costco taking over the world. It'd be Amazon. That would be the only difference, right?
So I took my wife to lunch over the weekend.
Yeah,
and we're sitting there, and she looked very nice. So I took a few pictures of her, and I posted them in a collage, and she hated them. She said, "Take that down."
Right.
Meanwhile, all my friends are going, "Oh, she's lovely," and she is.
Yeah.
So the next day, it's still up there. And she says, I thought I told you to take it down. He says, "I'm going to unfriend you."
So you've unfriended your wife now.
She unfriended me.
I got you. But you have to do what she wants.
That's right.
She's sensitive about
it's
her pictures.
Her world. I just live in it.
Exactly right. All right, look, we got stuff to get into this morning. All right, so on the website, we posted this article this morning talking about retirement confidence. And this is an important thing because it's important and it's also interesting. The reason it's interesting is because we just had this, torrid rally from the lows. And if you were Rip Van Winkle and fallen asleep, back in December, and then woken up, you go, did something happen in the market? I mean, the market's kind of not gone anywhere all year. You wouldn't know what had happened. And so it's interesting that despite all this, retirement confidence is at a very interesting level. And so we wrote an article about this, and this really kind of goes to the heart of really what's happening inside of the economy itself and what's actually going on. But the article's on the website, and basically it's talking about retirement confidence in this environment. Simply Wise was a company that went out and did this retirement confidence survey. So I took the study and I've kind of written an article around it, but explaining why things are the way they are. But they're on the website now, but we're going to talk about the article when we come back. Because like I said, the impact and the results of the study are quite interesting given what's been going on in the markets. But it's really not surprising when you think about where we've been over the last decade or two. So we'll come back. We'll talk about that right after the break here. I'm your host, Lance Roberts, for the Little Investment Show. Don't go away.
Burning down the one-night stands and everything around me. Got to stop some feeling so low.
Questions for Lance later? Ask now at realinvestmentadvice.com.
And welcome back to the show this morning. It's 6:33. So I was talking about just for the break that we got this survey from Simply Wise. And Simply Wise is a website, and they did a retirement survey. And what they found out was, and I've written about this before, about retirement and baby boomers moving into retirement and the issues that really face baby boomers moving into retirement, a large part, right? So, if we talk about the inherent wealth gap in the economy, we've talked about this before. Top 10% of the economy owns 88% of the stock market. That's getting worse as we kind of go along here. And, for a large chunk of baby boomers moving into retirement, a big chunk of them are going to require Social Security as a big part of their benefit, right? Of their retirement income is going to come from Social Security, Medicare, Medicaid, et cetera. But it's interesting because if you talk about the recovery in the S&P 500, I said this just for the break, is if you've been Rip Van Winkle and fallen asleep in December, woke up, last week, you'd be like, did something happen in the market this year, right? This is because the markets were basically flat for the year. And so outside of what happened in March, that very sharp decline, everything's back to where it is theoretically, right? Most people aren't, though, because it's really just been about 5-6 stocks of the economy that's actually moved back the markets to where they are. The real economy has not recovered that much, and the broad majority of the market has not recovered that much. But the index and the findings were certainly interesting, because 62% of Americans are more concerned about retirement today compared to 12 months ago. Now, that's up from 56% just in May. So even in a month where the markets were doing better and things are recovering, concerns about retirement have risen. 50% of Americans believe that they will outlive their retirement savings. That's not surprising. When you take a look at the fact that the average 401k balance is less than 1 year's income. The average savings account balance is well less than 1 year's income. No matter how you kind of measure the savings rate of most Americans, outside of about 12 months, they don't have a lot of money. And for many, it's less than that. 1 in 5 could not last more than 2 weeks off their savings, which kind of tells you the problem. 72% now plan to work in retirement. Now, this is interesting because that's also up from 67% in May. But 3/4 of retirees plan to work in retirement. Now, this is interesting from the standpoint because people over the age of 65 that were in the labor force was already at the highest level that we've seen since like the 1950s, right? Or whatever it is. It's been a while. And that was rising. Now, because of what happened in May and what's happening now, is the two age groups that have suffered the most in terms of loss of jobs and those type of issues have been those under the age of 25. So that's mostly your kind of part-time workers, et cetera. Also, your kind of early entrance into, restaurants and bartenders and wait staff and restaurant waiters, et cetera. That's a large contingent of that group. And so those, not surprisingly, when we shut down all the bars and the restaurants and the gyms and those type of things, really impacted that age group the most. The kind of the 30 to 45s, they were impacted, but not nearly as much. And it's kind of like this bell curve, because at the other end of the spectrum, the other end of the group that was most impacted by terminations and layoffs were those over the age of 60. Okay? So all of a sudden, here you have 72% now planning to work in retirement, but that's the age group that nobody's hiring right now. because you've got 50 million people unemployed. So there's lots of people out there to choose from. Why I'm going to hire a guy that may work for a couple of years before he retires versus hiring somebody that I can hire cheap now because I've got an abundant supply of labor. It'll be with me longer. So one of the challenges that those in retirement are now going to face is that the opportunity to work in retirement may not be available, at least at the rate that it was previously. The other side of this coin is that a lot of these individuals that were planning on working in retirement aren't showing up on the unemployment roll. They're not showing up in jobless claims. And the reason is, and we're about to see this in the energy space in particular coming up over the next month, is that there's about to be another wave of layoffs coming. And it won't, but it's not really in the terms of, hey, Brent, thank you so much for your service. We got to let you go now so you can go apply for unemployment benefits. It'll be, hey, Brent, we love you, but it's time for you to kind of retire. And retirement is very different than being laid off or terminated, because if you basically retire, whether it's your choice or not, you're getting a nice little severance package. You're going to get your retirement payout. You can go pull your 401k plan into an IRA, that type of thing, but you can't go apply for unemployment benefits because you retired. And so a lot of these people that are getting retirement or are being asked to retire, they're taking those packages and moving on. The ability to regain employment is going to be more challenging. And there's a lot more competition now for those jobs. And that's really, and it's interesting because my daughter's been applying for jobs recently, Chick-fil-A and, different restaurants and different things, trying to get a job. And she's having trouble finding a job because there's so many people applying for those jobs that have experience. She's 16, right? So she's just trying to get her, kind of part-time job, work through school. But there's so many people applying for those jobs because they're out of work that the choice for the restaurant is I can hire somebody with no experience and train them, or I can hire somebody who's already trained, got experience. I can put them right in and go, right? So they're willing to work cheap because they need the work. So, this is one of the big challenges that we're going to face, as we go forward, is there is a very, very large contingent of people that we don't count as unemployed. They simply have fallen off the rolls. They're called no longer in labor force, or not in labor force is the technical term. So we don't count them. They don't exist in terms of the BLS reports, but they exist in reality, and they want to work because they've got to pay bills. So this is one of the big things that's going on right now with the bill that's getting passed by Congress, which is this reduction in the unemployment benefit. For right now, a lot of people have been able to just live off the unemployment benefits that are coming in, that extra $600 a week, but that's about to go away. So this is going to increase the demand in the labor market for people needing to get jobs and make ends meet. So this is all going to become very much more challenging for retirees in particular that needed to work longer in retirement. Now, look, if you've got a couple of million in the bank, you've retired well, you got a great pension, this doesn't apply to you, right? But you're in that top really 2% of the economy. The majority of Americans do not have a lot of money in the bank. The bottom 95% of Americans at most have about $250,000 in the bank, right? So the ability to live off those savings for an extended period of time in retirement is simply not available. Continuing on with the survey, 1 in 5 Americans in their 60s have lost their jobs or were furloughed due to COVID-19. 24% are now planning to tap their 401k. Now think about that for a moment. 1/4 of the people that have been laid off or furloughed are now going to tap their 401k within 3 months of being furloughed, which means they didn't have a lot of money in the bank to start with, right? There were no excess savings. And I look at a lot of people, right? They live in big houses, they drive nice cars, they have, kind of the all-American lifestyle. And you go, wow, these people must really be doing well for themselves. And then you look at their finances, and no, they're not. They're just heavily leveraged, and they've got a little bit of money in their 401k plan. They're just hoping it all kind of hangs in here for long enough for them to build up that 401k plan to retire on. But they're living the dream now, and when something happens like this, all of a sudden, that comes apart very quickly, and now they're being forced within just 3 months to tap into their 401k plans, which was their retirement nest egg to begin with. Real quick, 63% of Black Americans could not come up with $500 of cash today. 48% of Black Americans and 43% of Hispanic Americans could survive less than a month on savings. Half of Americans say another stimulus check is extremely important to their finances, which that looks like that's going to be the case, but we can't keep doing that forever, right? We may do another stimulus check now, but what about after that? Or is this now a thing, right? Stimulus checks forever. 72%, 83% of Democrats, 60% of Republicans believe a recession will continue into next year. That article and all the graphs and charts on the website now, realinvestmentadvice.com. When we come back, I want to talk about the Cobra effect. What the heck is that? It's an interesting story. It was in this weekend's newsletter on the website as well. realinvestmentadvice.com. We'll be right back.
Real Investment Show podcasts are now available on iTunes. Listen anyplace, anytime at iTunes.com.
And welcome back to the show this morning. It is 6:47 as we get ready to wrap up this Monday edition of the Real Investment Show. Be sure you're by the website, though, realinvestmentadvice.com. Our latest newsletter is out, our latest blog posts. Ask questions, comments, check out our subscriber service, rapro.net. I mean, there's just tons of stuff at the website to help you, your investing, make you a better investor, financial planning. We just had our COVID coffee, our candid coffee. It's kind of COVID coffee because we actually did it all virtual, right?
Not too far off the mark.
Right, but we had our candid coffee over the weekend. All about retirement planning questions, stuff that interests you. We'll actually have that of a replay of that up on the website here soon. And then coming up on the 8th of August, we have our Right Lane Retirement Seminar coming up. Everything about dealing with retirement, forced or not, what to do if you've been unemployed, laid off, furloughed, what services are available, how to apply for them, what are the benefits, what are the opportunities, what can you do, the tricks and the traps, all that. That's coming up on August the 8th. You can register at the website, realinvestmentadvice.com. Love to see you there. That's one of our more popular classes. We cover a lot of stuff regarding Social Security and Medicare, Medicaid, and all the things you need to know. And this is also where a lot of people make poor decisions, right? They start tapping Social Security too early. They wind up leaving a lot of money on the table. They go through all that for you. So that's August the 8th. Go by the website, realinvestmentadvice.com. You can get signed up for that. So in this weekend's newsletter, there was an interesting story talking about the Cobra effect. And, what's the Cobra effect? And the relationship right now is to Fed stimulus, right? So, and I shouldn't say Fed stimulus, it's really all the government stimulus, whether it's, unemployment benefits, direct checks to households, all these type of things. And so we create, when you do things like this, you create behaviors. And no matter what you do, there's always someone that's going to take advantage of the situation to their benefit. And this is always the problem with government programs. You do something with the expectation that people will behave rationally. So in this case, when we're talking about, the COVID problem, right? People lose their jobs and they're out of work. So they need money. So the government says, well, here's some help to help you until you get reemployed. Now, the government's expecting you, of course, to be out there actively searching for a job to get reemployed and do what you're supposed to do, right? The reality is that when you show up and you give money to households and the household says, wow, I'm getting more money from the government than I was making before, why would I go back to work? And so they sit around and, and when they get called up, are you working? Nope, can't find a job. Here's your check. So people began to game the system, so to speak, right? And that's always the problem whenever you have a government benefit of anything. The Federal Reserve, same way, injecting money and liquidity into the markets, right? You create a impact, and people don't necessarily react rationally to certain forms of stimulus, and so they have a alternative effect. There's what they call the unintended consequences of these actions, right? So the Cobra effect is actually a story that goes back to Delhi, India. And what happened in Delhi was that basically the cobra population had exploded. So there were these venomous cobras everywhere, right? So it was a huge problem of cobras. And so the government says, well, I'll tell you what, if you bring us a dead cobra, we'll pay you for it, right? So they put a bounty on the cobras. And so, of course, people started going out, hunting cobras, getting rid of the population, and bringing them to government, collect bounties. Well, some enterprising young man said, here's an idea. I'll breed some cobras, and then I'll turn them in, right? And so all of a sudden, all these people started breeding cobras, killing them, turning them into the government, collecting the bounty. It was genius, right? I mean, a guaranteed business funded by the government. Well, eventually, naturally, the government finds out that people are breeding cobras for the bounty. So they say, well, we're stopping the program. So what happened then? Well, all these breeders are sitting around with all these cobras. They go, well, there's no money in breeding cobras anymore. Release them out to the wild. So they released them back out of the wild. And then, of course, they bred themselves, and the cobra population boomed. It exploded. Now they had more cobras than they had before. So that's the problem, is that sometimes the intended cure is worse than the disease itself. And this is the problem that we're running into now because of all these intervention programs and bailouts and things, is that we're warping the dynamic of economic growth because of all of these programs, right? So, and what I mean by that is that we're stopping the process of what's supposed to happen within an economic recession that would actually lead to a better outcome. We've talked about this before. Forest fires are good because when they occur naturally, we have natural forest fires, not going out and torching things. But when you have natural forest fires, right, it culls the trees, right? And so it allows for more sunlight to get into the forest and allows for healthier tree growth and et cetera. And the forests become healthier. So these natural kind of forest fires are actually good because it thins out the overgrown population of the trees that are choking off oxygen and nutrients to other trees, and it allows the forest to become healthier. And this is really kind of the case across all things. I mean, this is why, we have limits on, catching redfish as an example, right? We want you to catch the redfish. We want you to do that, but we don't want you to take the babies out of the, this is why they have a limit on the size, is that we want the redfish to have the chance to populate and grow, but you're trying to keep a healthy balance of these fish, but particularly when there's a invasive population of an animal, right? So an animal that is invasive and has, and actually creates damage to an environment because of foraging or whatever it is, we try to cull these herds back. And so we try to keep those populations of dogs as a good example, right? You should spay or neuter your dogs at 4 months old. Why? Because every year we put millions of dogs to death in shelters because there's simply no homes for them. And, people are out there, they're running around, they're not spayed or neutered, and they're having babies like crazy. And they have litters, 8, 9, 10 at a time. And so you have this explosion of the population. So if we don't maintain control of the population, it becomes unhealthy for the environment. So the point is that when you stop a recession from happening, you stop the natural cleansing process to allow the economy to be healthier in the future, right? So in the process of trying to bail out everybody, we stop the process of companies that need to go bankrupt from going bankrupt. We stop, the process of debt deleveraging, which would allow people to be healthier at the end of the cycle. Yes, it's painful in the near term, but by not letting these things happen, we continue to erode economic growth and building up the underlying disease that's in the system that keeps economic growth from becoming stronger in the future. And so, the problem is that for baby boomers, et cetera, we've got financial assets in a lot of cases, and we're at the kind of the end of our life cycle here. But for the millennials and the Gen Zers that are coming up, their future outlook is not getting better because we're not allowing the economy to go through the cycle. So, in other words, as I was saying with the Cobra effect, the cure that we're coming up with is going to prolong the situation in the future. Slower economic growth, weaker economic prosperity, wider wealth gaps, more dissension in the economy, more riots because of this wealth inequality issue. That's going to be a more permanent position within the economy because we didn't allow the system to heal itself, right? So the cure is worse than the disease itself. If you allow the economy to fail, and I don't mean like fail and it never comes back, right? But you have a deep recession, you run through the default cycle, you run through the bankruptcy cycle, you reduce the debt, and players that took on the risk, they're going to lose. And people that got themselves too far in debt, they're going to lose. And everybody's got to go through this pain cycle. But at the end of it, when we come out of it, everybody's healthier. The banking system is reset. The financial system is reset. There's value in the system. Things revert back to a normal base, and people can become more prosperous. Also, there's a whole plethora of opportunity that opens up for people to take advantage of, to create new businesses and create new opportunities. All that becomes available. But the longer that we keep these companies in business that shouldn't be in business, it limits the opportunity for someone else to come in that could do a better job, be more financially stable, provide a better product or service. They're locked out because the existing zombie companies that remain in place are limiting that opportunity of expansion and growth. So this is the issue that we're currently facing. And we'll continue to issue. But it was a point that we were talking about this weekend, because if you take a look at corporate profits, as an example, have been flat since 2012. Corporate profits have not grown. In fact, now they're declining rather sharply, because that's really a function of what's happening within the economy. So something to think about. It's on the website now, realinvestmentadvice.com. And, in closing thoughts today, as we talk about, more COVID bills and opportunities, and Brent posting pictures of his wife online that she doesn't like. Just remember to be good to your spouse, because right now they could poison you and it would be counted as a COVID death. So, I mean, we're counting people that die in car crashes as COVID deaths. So just remember that. People may be dying mysteriously. Yep, it's COVID. And nobody wants to show up in court. Right? So let's just write it off as a COVID death. There you go.
Who's to say?
Exactly. Watch your cupcakes. That's all I'm saying. All right. Wraps up the show for the day. Be sure to get by the website, realinvestmentadvice.com. Get our latest blog post and more. We'll have 3 minutes on markets and money out here a little later on this morning. And, of course, we'll have our Technically Speaking post up tomorrow, talking about where we kind of are in the markets, particularly after last week's failure at breaking out. All coming up on the website, realinvestmentadvice.com. Have a great Monday. And, of course, stick around, though, because Chris Salcedo is coming right up.
All the things I could do if I had a little money. It's a rich man's world. It's a rich man's world.